12,000 commercial credit agreements, 360,000 hours of human legal work. That is what one single system at JP Morgan processes every single year, in a matter of seconds. This is not a future projection. JP Morgan's Coin platform has been quietly running since 2017, doing the work of hundreds of lawyers and loan officers for nearly a decade. Most people have spent their entire adult lives assuming that a highly educated, white-collar workforce was insulated from the kind of automation that hit manufacturing decades ago. The erasure of Wall Street jobs is a finished event rather than a future risk. Today, we are documenting 4 specific, verifiable case files that show how this transition already happened. Let's start by looking closer at JP Morgan. Before COIN, reviewing commercial loans require lawyers and loan officers to manually read through dense text, extracting roughly 150 distinct legal attributes, like default triggers and covenant thresholds. It was a process defined by high hourly pay and the constant fear of human error. This chart shows the result of applying modern AI to that workload. 360,000 manual hours and well over $140 million in annual labor costs collapse into a metric measured entirely in seconds. JP Morgan restructured a $140 million category of human value, effectively erasing the billable hour model for this specific type of labor. Moving to our second case file, BlackRock runs its entire risk analysis operation through a system called Aladdin. It monitors portfolio risk in real time across trillions of dollars, running continuous simulations that no human team could track. Aladdin introduced a superhuman capability that rendered traditional risk management obsolete, causing the human role to quietly shrink out of existence. Our third case file hits the traditional entry point for young Wall Street workers, the junior analyst role. For generations, this meant spending your 20s grinding through spreadsheet models late into the night and cranking out earnings summaries. The highest levels of equity research remain human. The contextual judgment and client relationships required for an investment thesis are difficult to automate. Watch what happens to the career ladder on this chart. AI-driven platforms now perform junior-level modeling and sentiment tracking faster and more consistently than any human. By automating the entry-level groundwork, the industry has removed the bottom rungs of the ladder. This creates a structural crisis for the industry. By eliminating the grueling groundwork, Wall Street has broken the apprenticeship pipeline required to produce the next generation of senior experts. If you want proof that an entire job category can vanish without a headline, look at our fourth case file, algorithmic trading. Decades ago, American finance looked like this. Hundreds of people shouting over each other, making split-second human calls that moved the market. Today, algorithmic systems account for between 70 and 90% of daily trading volume. The market is now executed by code reacting to conditions in microseconds, a speed no human could match. This transition took 20 years of slow, incremental automation. The replacement of the human trader happened through quiet market reports, rather than dramatic press conferences. The New York Stock Exchange floor still exists as a symbol for the evening news, but the actual mechanism moving global capital has nothing to do with the people standing on it. The floor is now largely theater. That historical takeover of the trading floor is the blueprint for what is happening right now with Coin, with Aladdin, and with equity research. Modern finance has spent the last decade moving its most repeatable, data-heavy work into the code, quietly automating the core pillars of the industry. The public narrative is currently playing catch-up. Finance completed this transition years ago, and the broader economy is only now registering the impact of a transformation that mostly happened out of view. We have documented 4 massive structural systems that erased 4 categories of highly skilled, 6-figure human labor. This leaves us with a haunting question. If these high-paying jobs inside the buildings are already gone, what happens to the surrounding real-world economy? The restaurants, the neighborhoods, and the tax base that survived on those paychecks? Aladdin